Thank you for joining iMeet. When you hear the tone, you will be the 20th person to join the meeting. This meeting is now being recorded.
Hey everybody, good afternoon. This is David Blake with the Tuesday Tech Talk. I want to apologize for not being here last week. We had a little bit of the Hurricane Irma came up and knocked our power out of the building for about 3 days, and so we weren't able to do anything. I apologize for that. And so what I want to do today is actually talk a little bit about what we were going to talk about last week. I think probably cost you money with us not being up, but we'll take a look at some charts. If you're new to this, generally I talk about 20 to 25 minutes. It may go a little bit longer today because we're going to talk about a couple of very specific things. After about 20, 25 minutes, I'd like to open it up to questions. If you have anything that we've just talked about or some stocks that you'd like me to take a look at, we can do that. Individual stocks or indices, whatever you want to do. But anyway, today what we're going to try to do is take a look at the industries that could see earnings estimates take a bump up following the storms like we had in Texas and Florida. Obviously it's a horrible thing, and most people aren't thinking about, oh, well, how am I going to make money off of this? But this is a business, and your finances are your own business. And I think that if you follow along with this, I don't normally recommend this, but you may want to watch this a couple of times and keep a pencil and paper around and write down some of the stuff that we're talking about. It's a little bit late because of the delay and stuff in our, with the holiday and stuff. So this is about 2 weeks late on this thing, but it's for something that you can keep around with your portfolio papers. And next time we see a storm that is out in the Caribbean, it looks like it's headed this way, you can pull out this presentation with the notes that you've made off of it, and I think you'll see today where you can benefit from what's happening. You don't want to benefit from somebody else's sorrow, but again, it's just a reality of what we're going to do. So first, what we're going to do is we're going to look at a couple of different indexes and just look at the broader market. First off, here's the Dow Jones. Last week, as you can see over here, we turned in the best one-week performance of the whole year. It was up 2.2%, gapped up over here, and just kept on marching higher every day in the new records. The CTI is a bullish plus 13. Momentum index went up to a plus 6. Sentiment index is a neutral at plus 1, which is good. One of the things that happened over the last couple of weeks, the percentage of bullish investment advisors has gone down from a high of about 58 or something like that. Down, it's been in neutral territory now for the last 5 weeks, which is good. That means that the professionals aren't quite as exuberant about the market up here, and that's a good thing. One thing that is a little bit troublesome is that the AAII, which is the American Association of Individual Investors, jumped up last week to 41.6. And that was the highest total that it's been since January. So the retail clients are getting more bullish while the professionals are backing off a little bit. We'll see how that plays out. But this last week we had the S&P oscillator hit 4.2% last Wednesday, which indicated that the market was overbought. You may have heard Jim Cramer talking about that in the past. Market Edge and Computrade Systems now works the S&P short-term oscillator. So those are the subscribers that go into the new beta website. On the markets page in the upper right-hand corner, we actually will give that to you. So next time you hear Kramer talking about it, you'll already know about it, and you can say, yeah, I knew that. He's behind me. It was a good, strong week last week. Every sector was up. The only one that was down was utilities. The gains were led by energy, financials, materials, industrials. All of them were up more than 2%. So it was a broad-based, good breakout in here to new highs. The breadth was also bullish. It confirmed the move higher. We had the NYSE AD line hitting new highs. Let me pop that up. Here we are over here. This is the NYSE AD line. For you new folks, this is what we consider as kind of a leading indicator of market direction. When the market rolls over, you'll usually see this thing about 2 months ahead of time start to roll over, more of a gradual thing. This is confirming that the new highs that we made last week. You also had on the NYSE an expansion in the number of new 52-week highs versus number of 52-week lows. Over here we were talking about that this was, how big of a correction are we going to have, and a lot of it's mainly because of the passive investing in ETFs. You don't get the selling in stocks that you usually used to get. So even though we were bearish on the market, this was telling us that we were bearish, and this was giving us a little bit of a concern also. But then when that turned around, the CTI went bullish, and I think we could probably go higher from here. Now on our Dow, I have 22.5, I think, for the initial target. Now, in addition to this thing expanding, we also, a thing I keep track of is the number of stocks that are within 1% of making a new all-time high. And that right now, that's back up to 24%. Back in here, we were down to about 10 or 11%. So that number of new stocks pushing towards their new highs also is confirming the higher move. And we're also down now to only 9% of stocks are within 1% from making a new low. We had the September FOMC meeting got underway this morning. Right now, the CBE group is only forecasting a 2% chance of a rate hike tomorrow. But we should get some verbiage about the Fed unwinding their $1 trillion balance sheet. Now, that could rattle the markets a little bit, depending on how her verbiage comes out and how dovish she is. I don't think Yellen is going to do anything much to rattle the markets. She may not be around here towards next year, and if that's the case, she certainly doesn't want to wreck her legacy by having the market pull back on her watch. So I don't expect to see much of anything, but I think that they've been kind of laying it out for us for the last couple of meetings that they've got to get this underway. And since we're in unprecedented chart territory, we don't know how that's going to work out. But I think, like I said, the Fed should should be very dovish on that, and they're not going to push anything too far. They're going to err to the cautious side. So I don't think we'll see anything much to the downside if we do get any selling. All right, here's the S&P 500. Real quickly, again, we saw this big jump up after the hurricane, and we marched higher every day. Accumulation distribution is still moving up. 14-day RSI confirming it. A little bit overbought by some measures, but not too bad. So I think that this still works higher. The target on that is 25.35 for the S&P 500. Here's the Nasdaq coming up here. We're kind of bumping up against this old high over here, intraday high. Today we are. Let me see here real quick. Today we were at a new high earlier. I haven't had time to look at it here recently. I've been working on this thing, but we are now. Yeah, we're at a new high right now with the Nasdaq. It still looks good. A little bit of slowing of the momentum here, going sideways. You'll want to see this the 14-day RSI break up above this, and here the next day or two on this new high. Here's the advanced decline line on this. This is where we were talking about the market's weak, and we had a lot of selling on smaller caps. The Nasdaq 100 still was firm during this period, but you had the Russell and transports and stuff were coming down here. But once we got into this hurricane season and people started thinking that we were going to break out the upside, good participation. This is the highest it's been in several, and probably a year or so. So again, this is confirmation on the Nasdaq that we're moving higher. Another confirmation. This is expanding. This is the number of new 52-week highs versus new lows on the Nasdaq. Again, that just means that there's more and more stocks that are breaking out to new highs with the index, which is what you want to see. Now, here's the Russell 2000. Look at this thing here. We were concerned. Here's the weakness in there. When we had the bearish CTI, we had a 7% breakdown in the Russell. And the Dow Jones Transportation was also down about 7% during that period. So the CTI was correct. It's just that with the passive ETFs, you don't get the big boards correcting like that. Okay, now we've had about a 6% breakout in here. We're not at a new high today yet. We're still kind of struggling up here. But you want to see the Russell 2000 and small cap index lead the charge. That and the transports In this case, we're getting that right over here. Here's the transports again, completely took away all this 7% drop. We're back up about 6% on that, and that looks strong too. If we can break out to this new high around, oh, that's the Russell. Wait a minute. Okay, I did two charts on that. The transports are also up about 6%. We want to see them get to about 9,500. We're at 94, 92, so a little bit higher on the transports will be breaking out to new highs. Now, here's the semiconductor index. You know, despite the fact that the Nasdaq isn't quite able to push to a new high, the semis have had a couple of great days. In fact, they're up another 0.5% today, so they're moving on higher. The semiconductors are on fire, and then the NVIDIAs, the Microns, you know, some of these on semiconductors, several on there you can look at. But what's been happening with the NASDAQ, and especially the NASDAQ 100, you've had a bit of a pullback in some of the large cap, some of the FANG issues, where they were going a little bit sideways. You know, usually Apple goes sideways to down a little bit once they release a new phone, that kind of thing. Microsoft pulled back a little bit. But they're close to their new highs, but Facebook and all, they kind of they all went a little bit sideways. So the XLK is you know, it looks fine, and it's going to be fine, but you just have a little bit of profit taking on the FANG stocks. All right, the best performing sectors last week, again, was energy, financials, industrials, and materials. This is including the last 2 days. The industrials and materials were actually up more than 2% just of last week. So this is just a 1 week period. All right, stocks and industries that we're going to look at today. And we're going to go over a lot of individual stocks. I think you could probably write these things down. And we're going to just talk about what happens, you know, when these storms hit. You know, generally it's not the people that are in the way of the hurricanes in Florida and the Gulf Coast and Texas and all. They're not thinking about what should I be putting in my portfolio when my house is getting blown up. But the money managers and hedge fund managers up in New York are all sitting here analyzing. Just when what was it, Irma missed Miami and went over to the West Coast and then cut it back across and all that, the people up in New York just decided, okay, it would have been much worse if it had taken out Miami. That's where most of the business is. So that's good for the market, and we're not going to, we'll go ahead and buy it on that. But what we're going to talk about today is the different industries that actually will benefit from that. Now, one thing I want you to keep in mind, that these companies are going to move, as you'll see on these charts over the last 2 weeks. But what I want to stress is that these are trading ideas. And just because you have a hurricane coming, it doesn't mean I'm going to buy a drywall company for the next 6 months and see how it does. The analysts will raise their expectations for the quarter because these companies are going to make more money. You get the initial pop in these things, and then you sell them. In fact, in some cases, you can actually short them, as we're going to look at today. So what I want to look at here, first off, we're going to talk about Harvey. When Harvey hit, that was kind of a unique storm in the amount of flooding that it really wiped out a lot of cars and trucks. So what happens, they're going to need to be replaced or they're going to need to be fixed. So what's going to benefit? Before I get to that, I wanted to point this out. I was kind of hurried today. This is the XLE, which broke out last week. We've been very bearish on the energy sector for a long time, and we finally got this bottom in here. We broke the uptrend on that, and the indicators are also indicating right now that we can probably have more than just a trade. I don't know, longer term, like a year or two. I still don't like the oil stocks. I think their time has passed. But this is the time, if you had been buying here after the storm and all, we could have got some, especially the refiners. SU is one, Phillips 66. Some of these companies in the energy sector are stocks that we could look at. The other one that we've been talking about a little bit over in here, we talked about would we be buying the financials, and we said no because rates were kind of coming down. Buy the dips. So we got this dip down here to the 200-day moving average on the banks and insurance companies. Then they bounced after this last storm, and they look like they're probably going to work their way higher. We've had the 10-year Treasury yield went all the way down to about a 2.05%. This was I don't know, January. What was it, 2.6 or something like that when they were raising rates, or March. And now we're finally moving back up a little bit. We're not going to get a rate hike this time, but we're back almost at 2.25. And that's at the point now where, as we move into the fall, I think that, you still buy the financials. You nibble away in here right now. You can see the upturn on this, that means that more institutional. Also, you can see here on the energy. All along here, we've been bearish and saying, well, we don't want to buy these things except for when it hits this bottom of the channel for a little bounce. Okay, now we're starting to see the accumulation come in, and this is not you and I buying this. This is the mutual funds and the hedge funds buying that. So, again, with the financials, you're starting to see a quick bounce in here, and I think the financials can probably work their way to new highs in here, and that's going to be good for the broader market if we can have these two groups starting to lead the way. Okay, the third was materials, which also led last week. With the materials, a lot of this rebuilding, the infrastructure, that's what's benefiting this. Again, this big jump up here in accumulation, that's not you and I buying. That is the institutions buying that, and they're going forward with this. Okay, so again, back to the first hurricane. So the autos and truck makers got banged up pretty good. These cars need to be replaced. Insurance is going to cover most of that. But if they don't replace the car, they're at least going to have to do some repair work. Now, this is on the industry group analysis, and we have several of the industry groups that I'm going to talk about today in here. You can go in there, look at automobile manufacturing under industry group analysis, and you can see over here, okay, here's a storm, boom. We start to head out. It's outperforming the S&P 500, even though this is breaking the new highs. This is really on fire. Now, once you take these things, you can look at what stocks are going to benefit or which ones are strong in those strong groups. Okay, one of the ones I like here that again, I apologize that we weren't in here last week, because we would have been, or the last 2 weeks, because we'd have been in over here. But this is TM, Toyota Motors. They make autos and they make trucks. Their sales are going good. They pay a good dividend. If you're a little older guy like me, you may want to buy something like this. This gap today was a little bit much, or this thing can pull back to some support around this area, around 117. I think it's a stock you want to own. General Motors, again, right over here. Okay, we get word that all those cars were damaged over here on the 28th. That's right there is where the hurricane hit. Boom, here comes GM. Another one, the next time we're looking at something like this, especially with the flooding, you're going to buy it. Now, a lot of these things weren't, longer term. I don't know about this thing. I don't want to short GM yet, but over the next couple of days, some of these stocks that we're going to look at today may be short candidates. Here's a Honda Motor Company, HMC. They also make trucks and everything and cars. Here you can see over here is the 28th of where the hurricane hit. Boom, they take off over here. It just went above the 200-day moving average. Again, they're overbought in here. At some point, I don't know if I would short them quite yet because they still got to be buying these things. But as you can see, these are trades. This is going to happen, and it's going to happen again next time that you're going to get this breakout. Okay, how about the auto parts? Look at over here. Boom. Here's once the hurricane hit here in the end of August, look at that spike in auto parts. You look over here, here's a stock, we do these portfolios in here. MTOR went into the portfolio about 10 days ago at $20.11. Today we're at $25 on that thing. Let's see over here. Some other ones. Here's MTOR. Here's the 2011. Here's where it went into the portfolio on those momentum plays. Look at over here today. We're at $25.50. This is a stock that next time we hear something like that we can look at. Overbought in here, but a good winner. Here's American Axle, AXL. Where did the hurricane hit? Right here. Line up there, broke this downward resistance channel. You may get a trade up here up to maybe the 200-day moving average. But, again, this is a trade. See the major trend? It was still down. In the accumulation, okay, you got some buying coming in here. People that were aware of this, they see this coming in, we're going to buy these stocks. And, you have this in your portfolio papers next time. You're ready to go. This chart looks good. This is Dana Inc., DAN. Came up here. You broke out. Right here's the hurricanes hitting. Went from 22 to 26. And here's the accumulation popping up in that thing. So another one here. It bounced off of this. Here we got a trend line coming up here. It's just starting to break the 50-day, and now we're back above it. A little bit overbought in here, but another example of what we need to be looking at. Okay, here's another one, LEA, Lear Corporation. Again, the body auto parts. Come over here. Here's the right here's the hurricane hit. It's gone from 140 to 165. Okay, you can see this thing again. They're overbought. But the purpose of this, since we didn't get it in here the last 2 weeks, is for you to write these things down. And next time we're looking at this, you're going to pull these things out. You know, if all of a sudden they say, look at Maria and say, hey, Maria's headed right for Florida. These with lots of flooding expected. These are stocks you may want to take a look at. Okay, rather than look at some of the home builders, we're going to look at some of the forest products and paper products. These are also areas that are going to pop. Here's you see this little pop up here in the forest products. If you go in the industry group and look at that, you're going to have Delta Timber, Louisiana Pacific, Weyerhaeuser, some of these things. And when you think about it, you know, you can think, oh, you're going to have to build new houses. Well, yeah, but that takes a long time. Most of these are going to be areas that are going to be fixed up. And when you think about this, if you think about the gold rush back in California, you know, who got rich out there? It wasn't everybody that went out there, and all the gold miners. Very few of them got rich. The people that got rich were the guys in the store selling the picks and the mines and the wheelbarrows and that kind of stuff. They're the ones that got rich. So what we want to try to do is look at the little products that are going to come out here that are going to benefit. Okay, and this thing in the forest products, here's Delta. Look at this here. Okay, here we are. We get hit. Boom. Went up here from, 67 up to 82 or something like that. Okay, look at this accumulation. This isn't us. This is the institutions buying these things. We're overbought. You know, this thing was in a bit of a downtrend. You're going to watch this thing here. I don't know if this is going to be a short yet. It's not a short yet, but this is something you want to watch on to see if it starts to roll over here. But DEL is one that sure benefited from it. Okay, here's Louisiana Pacific. Again, they make paper products, forest products, drywall, lumber for the decks and for the buildings that have to be replaced. Again, look at the accumulation. Break out to a new high. That thing breaks down to a 25. You probably have some problems in that one. Again, this was a trade. You got this thing. This is about a 2-week trade. This was probably longer because we had two hurricanes coming right in a row. But even for one, you're going to get a pop up to about here. Okay, here's Weyerhaeuser. Not as good, but you still got that pop. Now it's starting to roll over. You see, a lot of these things they weren't going for this. This is strictly because of the storm. Okay, and here's LL, Lumber Liquidators. They had gapped up before on some earnings or something like that. It's something they did. But it had a little bit of a move over here. I don't really like this chart too much. I think this is probably going to roll over here, and this could probably move its way a little bit lower. But that's just something you'd want to keep in mind maybe the next time. Okay, here's another industry group. This is the home furnishings and appliances. Okay, all those homes, they have furniture that has to be replaced. They have appliances that have to be replaced. I looked at a lot of the appliance things, and there aren't a lot of them, mainly Whirlpool. They make everything. Samsung does, but they're so, and GE, but they're so broad-based and conglomerates, I don't really see them as much of a play. But the ones that are in here, okay, here we get hit here, and look at that spike versus the S&P 500. Okay, some of the stocks in here that you can look at, here's Hooker Furniture. Had the pop up in here. It broke out to a new high, ran the resistance. We'll see what happens here. A little bit of accumulation. HOFT is a symbol on that. Herman Miller Inc. MLHR. We get hit over here, kind of bounced back, and we took off for a second one. Under distribution, we're getting some buying in here. I don't know if these are ones that I'd kind of watch this. This chart doesn't look all that bad to me. So that may be one that we could get a play on. Here is RH Warehouse. Now this is Restoration Hardware. This stock trades crazy. This thing goes from 26 up to 100, back down to 50, back up to 100 over here. Now, this thing gapped up. On this thing here, look at the distribution of this thing while it gapped up. I would be more inclined to see if this thing falls back below 67 and change. I think I would probably look to short this. Whether this pop was due to people just figuring that people are going to have to redecorate their houses, I don't know. But I would be a little bit inclined since it's so overbought, and I see this negative divergence in here. I might be looking to short this one at 67 and change. Here's the Whirlpool. Again, I got a little bit of a bounce in here, but it rolled over pretty quickly. That's why I'm thinking maybe more of the Best Buys or, some of the stores that sell the retail or sell the appliances might be a little bit better, but I don't really like the chart here on the Whirlpool. Again, who does sell appliances? Home Depot sells a lot, and so does Lowe's. Look at the spike in Home Depot. Although I don't like, I think Home Depot is probably, it bounced up here to a new high. I wouldn't be a buyer of Home Depot right here. I would wait to see if it comes back here to its, 100 and 200-day moving average. Same thing with Lowe's. You got the pop. I do like in Lowe's, you got a nice double bottom over here. But if we can come down here around to this, what is this, the 100 or, yeah, it's like this, the 100-day move. That's the 50-day moving average. If you can get Lowe's down around this area, I think you could probably buy it in there. You're starting to see a little bit of pickup in accumulation, but I wouldn't be chasing it right in here. But those stores would probably be better than the than the actual appliance makers themselves. All right, what else are you going to need? You're going to need a lot of concrete, cement. That's another example. This is a trade. Here we go. Here's boom. You got the hurricane coming in, and boy, they took the profits on that. So when you grab these things, and you're looking for that hurricane to come in here, you get your pop and you sell it. In this case, look at that distribution. Boy, these guys took that and ran. This is USCR, US Concrete. Okay, here is EXP. This is Eagle Materials. They sell more than concrete. They sell, let me see on this one. EXP sells, they're cement, also other materials. So you got kind of a little trading zone in here. If this thing breaks below 100, you probably could short this thing too. But you got a nice spike in accumulation. They bought that as soon as the hurricanes hit. Okay, VMC, Vulcan Materials. Boom, there's your spike. And immediately they took their profits. They got hit that area, hit the 100-day moving average, and they sold it off back down here to support. Maybe now down in here, you might watch this thing to see if this can have a double bottom. But Vulcan Materials is a pretty big company. I certainly wouldn't short it here, but maybe if it would make another stab up here and then roll over, you could do that. Okay, here's another thing. This is the building materials. This is a group of stocks that are going to be in construction materials like the drywall, anything else that you're going to need for that. Some of the other ones in here, maybe paint and things like that. So it's a big conglomerate. Here's your spike. Now you're kind of going sideways. Some of the groups in here, this is Masco, MAS. You moved up in here, kind of hit you got above your 50-day, but you were in kind of a downtrend, but just because of the hurricane, you got a little bit of a move. So you went from 30 to about 37. That's a nice trade. That's a nice accumulation. Not great, but you got your trade in there. You got your bounce because of the hurricane. Owens Corning. Now this one could be one that you may want to hold on to. Owens Corning makes glass, their roofing, their drywall, lots of things in here. OC pays a good dividend. Going sideways here, a little choppy trading. I kind of like this stock, actually. If this thing can break out to the upside again, it may be something that you could actually hold on to for a longer term, maybe go for the dividend too. Another one in this group, AWI, Armstrong World Industries. They make roofing, they make drywalls, they make ceiling systems. We'll see if this is a little bit of flag. If this thing comes up here and trades up here back to this 49, you probably have a trade. That would mean you could probably get a trade up to about 52 on that. Good resistance. They took their profit right here. You got your bounce. Let me take my short-term trade. Now let's see what happens and see if what it's going to do from there. Because remember, if the analysts are going to look at that, they're going to look at this and say, okay, because of the storm, they can make we're going to bump up our earnings from 12 cents to 15 cents. But then since everybody will have bought stuff, we'll probably take the next quarter. We're going to take it from 12 cents down to 9 cents because everybody's going to buy this quarter. Here's another one, BLDR. This is called Builders First Source. They're also a store. They sell a little bit of everything. Here you got your bounce. Now you're kind of going sideways. You've been kind of going sideways here. Kind of a choppy trading thing in here. I don't think this is a short in here. I think that if this thing stays here, with the infrastructure stuff, we can start to see this thing work higher. I kind of like that as an overall stock. Okay, now you also got to paint everything. You got all your cabinets in there. You got your walls What looks good if you're an older guy, Sherwin-Williams, SHW. It's just worked your way kind of gradually up there, not great accumulation, but you're paying a 3.14% dividend. I think this is just kind of stepping its way higher. Momentum looks okay. You've had a nice run in here. You're going to consolidate some of this gain in here, but yeah, I wouldn't be afraid to own Sherwin-Williams a little bit more for a longer term if you like that. Here's PPG. This also pays a decent dividend, about 1.8%. This thing has paint. They have coatings for buildings, coatings for other materials. It started to work its way, a little bit higher over in here, and it's under good accumulation. It actually looks pretty good. Broke above the 50-day. Maybe some of the products that they sell are more longer term and more industrial, so maybe they're going to benefit a little bit longer. Here's another something else. This is just things that you want to think about that need to be replaced. If you have plumbing, you have flooring, you have the hardwoods, you have carpets. Here's Fortune Brands, FBHS. Here's their pop. They're kind of coming to this. Is this a flag pattern? I don't know. If it is, it's going to break out here, probably go to a new high. But you see some nice accumulation. They've got enough diversification. I think a lot of people, this thing may be one of the ones that can actually move a little bit higher. Mohawk Industries. This thing probably is going to move a little bit higher. I like the accumulation on this. They make the carpets, flooring, for all things. That's probably one that both hurricanes you're going to have a lot of flooring problems. It's pulled back here. You got to pull back down to this support area right in here around 247. Maybe you could probably nibble away to see if that thing's going to take away. But it's holding the support areas on the 14-day and all, and the accumulation. I like that. Here's AMWD. This is American Woodmark Corporation. They make cabinets of different materials like that. They got a nice bounce. Now people can see what's going to happen with this thing. What are we going to do? Accumulation's okay. You filled this gap from back here, which was probably around due to earnings or something like that. Okay, you got your pop because a lot of people are going to replace cabinets, that kind of thing. I don't think I'd be chasing this even if it works its way up here. Whether it's a short here, I don't know, but I don't think I would look at that. But again, for the next time, AMWD could be a stock that we want to look at. Okay, well, last one that we're going to look at as far as the different industries is recycling. Of course, we got all this mess down here. Somebody's got to clean it up. And you can start getting your questions. I see a couple coming in already. So if you got some questions of all this or some other stocks, let me know. Here's your move up. Waste Management was already doing well all through the summer. But stocks in here have done quite well. Look at them. Here's Waste Management. Pays a great dividend. I think these you could probably go longer term because I think that the cleanup's going to be a while. And these companies have done well all year long. Here's this has gone from 58 up to 78, 88. Waste Management looks good. WM. Here's something called Landauer, LDR. Here was the hurricane over here, came out, and then boom, also it jumped up here. It gapped up. Look at this. Look at that accumulation on this. This may have been more than just the hurricane. I got a feeling this may have been some kind of announcement they were going to beat earnings or something like that. So let's watch that thing. You've got some consolidation of that. Watch that gap. If it breaks the gap, you can short this thing because it's so overbought. You probably got to trade from like 66 and change down to about 62.5, 63. Here's CWST. I like this thing. This isn't one of my portfolios. It's just higher highs, higher lows. It keeps working its way up. Didn't get a big spike, but it was kind of going sideways here, and now it's kind of moved up ahead. Accumulation started up again. CWST, Casella Waste Systems. That I like that. A couple other ones that I don't like as much, but ECOL, US Ecology, and here's your spike. I'm not really familiar with what these guys do. I just saw the chart and they were in the industry. Here's another one, CLH. It's Clean Harbors. Whether they clean up the waterways, I have no idea. I didn't get a chance to look into it. But they got the bounce, and now they're kind of trying to hold support here. Not great accumulation. I've got a feeling this thing may, this could be another short candidate after you got that spike to come down here and test the lows. So just kind of wrap it up. We're a little bit late, unfortunately, because of the last 2 weeks not having the webinar. I apologize for that, especially for last week because we didn't have power. But what I want you to get out of this today is you can go back to these things, write these symbols down, put them away, and now when you see something like this coming, you've got a list of a couple stocks that you can put some money into for a trade, get in, get out. You don't think, oh boy, we've gone from 20 to 25. What's next? 50? No, it was 20 to 25 was probably it. So that's you get your trade, get out of there. If it because what happens is when you get all the buying coming in at one time, that they just take the earnings power away